This might be the most important part of trading. I don't care how good your indicator is or your chart pattern is, it's simply not going to work over time. Now, don't get me wrong, indicators and chart patterns are great. You can even use these things to screen for the right stocks to trade, but in a vacuum, I would argue that they are meaningless. We've seen in our quant work that we can clearly define a setup with variables and indicators, but what happens when we trade this across all stocks in the market? There's tons of noise. The win rate goes down, but when we find a way to define the right stocks to trade, a strategy like this can have a lot of edge. Welcome to episode 5 of the Trading Floor podcast. I'm your host, Garrett Drinan. I'm here with Tim. We got Kurt in the background, as always. And we're on Spotify now. So check us out there. If you've been watching us on YouTube, we're starting to spread all over the earth. Before you know it, we'll be in the supermarket. All right. So you're only as good as the stocks that you trade. When I say that, Tim, do you just hear Bella in your head? Like, have you heard him say that?
100%. I can only imagine how many times you've heard it on the desk too, but exactly what I first thought of.
We hear Bella say a lot, and right, there's a lot of wisdom in a lot of the stuff he says, but sometimes it takes a while, right? As developing traders, we hear some things, we're like, what does that really mean? You're only as good as the stocks you're trading, right? So it took me a second when I started trading here at SMB to kind of understand that. And then it really, really started to pick up and take on its own emphasis, right? And I would argue that this is the single most important part of our trading, right? Like if we don't nail this, we don't nail anything, right? So what does this really mean, and why is it so important? So the analogy that I like to think about, I used to be a musician. I was in the music business for a while, touring, recording, doing all that kind of fun stuff. So for me, the analogy that I like to use, and some people might relate to this, is that think of yourself as a musician, right? You're a skilled classical pianist, and you can play anything. If someone hands you a piece of music that's boring and garbage, you're probably going to sound boring and garbage. And I know, like, if you're very skilled, you can probably turn that into something. I get it. But for the most part, it's not going to be nearly the same kind of vehicle for you as a beautifully written piece of music. If someone hands you a beautifully written piece of music, you're really going to be able to show your skills and sound great, right? It's going to be a much better platform. And so to me, stocks are the same thing, right? The right stock to trade is like a beautifully written piece of music. If we're skilled traders, like, that's what we want to be playing. We don't want to be playing the boring piece of music that has all kinds of dissonance and terribleness and stuff that we just don't want to deal with, right? So why is this so important, Tim? Why is this important to your trading?
You can trade a certain pattern on every stock in the universe, and you'll see that you will not be profitable. You will not be able to get consistent. And it really goes down to finding the right stocks to trade. Our intraday patterns, our setups only work if you're in the right stocks and in stocks in play.
We have indicators, we've got chart patterns, right? And all that stuff is great. I'm not here to demonize that kind of stuff, but like, your indicators and chart patterns are just not going to work over time if you're not in the right stocks.
Would you like to gain the biggest edge a retail trader can get? All of our daily and weekly in-house trader meetings are now available to you. Just head over to smbtradingfloor.com to find out more.
Chart patterns are great. Like, if you're trying to buy a bounce, there's a way to do it, right? There's certain things that you want to be able to see in the tape and the chart, and like all of this stuff are great skills in trading. But like, the bottom line is, and right, like, we've seen this in the quant work that we've done. We've seen it in the discretionary trading that, we'll build a strategy with indicators, with patterns, like all kinds of variables, right? And it's a good strategy. If we trade it across like all stocks, all examples in the market, it's not going to test well and it's not going to perform well in a future environment. Once we find out how to actually execute that on the right stocks, right, with some sort of filtering variable, some sort of context, all of a sudden it comes to life, and all of a sudden something like this can have a lot of edge.
You can say you're an opening drive trader. It reminds me of the model we were working on earlier this year with opening drives. And you have to narrow the universe so selectively to be able to find edge in profitability. But if you're an opening drive trader and you're trying to trade opening drives on every single stock in the NASDAQ, it's going to be a tough go around.
So what are the right stocks to trade? Like what does that even mean? Right? So that's what I want to dive in today. I want to go deep into this, and I want to go over like examples of how we do this, like stories about certain moments, certain trades where this was really crucial, right? And when this has been the primary driver for a trade, which I would say it almost always is, right? And like what the right stocks to trade really means to us, and so that like really by the end, like we really get to the bottom of how to unlock this in our trading, right? So but first, Tim, how you doing? I bet you're pretty good after that Indiana win last night.
Oh, I'm feeling amazing. The voice is a little shoddy, was yelling a bunch, but huge Big Ten championship win. Indiana's number one in the country, first time ever. I think it's the first Big Ten championship since 1967. I was with my parents watching and some friends. Certain points of the game, I was doing high knees out of excitement. Didn't even know how to contain myself. But we're feeling great.
I'm just glad you didn't lose your voice for today.
Not
Um,
fully.
yeah. All right. So I've got a story for you. So around this subject. So
Oh
when
yeah.
I started trading, I was studying all kinds of patterns, right? Like chart patterns and breaking them down. And I was like, I'm going to be the best at trading these chart. I'm just going to be the best in the world at these chart patterns. And I would see A plus versions, like really clean versions of these. You would see subpar versions of these, right? And you really want to focus on the A plus versions. And I was going to town on this kind of thing. And I would notice that some of these stocks were making huge moves and some weren't making moves at all, right? And when they're not really making a move at all, you end up getting stopped out, you end up getting chopped up. So I'm like, there's got to be something else going on here, right? Because once in a while, once in a blue moon, this works amazing. What about
Yeah.
all these
Yeah.
other times? Like how, like what's the difference, right? And I started to study what created these huge moves and realize that there's something else going on called context that's informing me something about these names that have a reason to go a lot higher or a lot lower, and that I could then just sort of apply these indicators or these chart patterns as vehicles for me to execute the trades in these bigger picture contextual situations where I already knew there was a huge potential for a big move.
Do you remember when that clicked for you, or like how that felt when you figured out context and you started really honing in on that as the focus?
Oh, yeah, I mean, not only did it improve my performance, but it made my life a lot easier because I no
I
longer
bet.
felt like I had to just look at everything in the market at the same time and just be kind of obsessed over like where's my setup, where's my pattern, you're right, because you could really narrow down the universe of like now I know like these are the 1, 2, 3 stocks that I want to be looking at, right? Like I
Yeah.
barely care about anything else. And of course, we're always scanning the market for new versions of those types of things to pop up, but in terms of focus throughout the day, narrowing down that watch list is everything because we only have so much bandwidth. I know that, I mean, there are some traders on our desk like Shark who has, I think, like endless bandwidth. I
20,
don't,
30 tickers at a time.
I,
He's
I,
incredible.
I don't know how he does it. Everyone has their like Superman power, right? And that's one of his where he's able to watch 30 tickers, trade 30 tickers at the same time. Most traders are not like that. I'm certainly not like that.
So what you're kind of saying is the context when people are saying stocks in play, where you have to start is understanding the context.
Yeah, and there were 3 big realizations for me when I went through this experience, right? So, 1, the stock needs a real reason to move, a context, like you said. So, number 2 is that the pattern or the indicator is just a vehicle for the execution of the trade. Like that's where we can define the timing. That's where we can see the buyers and sellers come together. Like for those of you who saw the episode on QURE, we actually focused on that aspect of the trade where there was a really good pattern in one of these names that had a reason to move.
Do you want to sit in on all of our daily and weekly in-house trader meetings? There's no bigger edge retail traders can get. Visit smbtradingfloor.com to learn more.
Number 3 is the real play is in the stock, right? And that's like people might be like, what does that mean? But we're going to get into what that means. We're going to totally break that down. So, do you have any experiences like this?
I mean, yeah. So you figured this out, and I'm very glad that you had this eureka moment because when I started trading, I think it was about maybe 5 months in, you started mentoring me. Carlton hit me up and he was like, I think it would be great if you start working with Garrett. And I started sending you my daily report card every day. And at that point in my trading, I was over trading a ton. It was exactly like what you were saying. I was looking for patterns. I had a couple of setups that I learned, and I'm like, oh, now I need to find these in any stock. And what the result was, I was getting chopped up in a lot of stocks not in play and looking for patterns when you shouldn't be looking for patterns. And the big thing I was missing was that context. Actually, Garrett, here, I have a blast from the past, an ancient artifact that I found. Kurt, could you pull up image 15? You're going to love this, dude.
Oh, no.
You're going to love this.
Oh, no.
This is from when you were mentoring me. And look at this email. So I just want to read your response, but this was on a day, it was from April 12th, 2021, to give you an idea of how ancient. That was right when I was starting trading. And NVIDIA had, I forget exactly what the news was, but they had an investor day the previous day. And something came out about their GPUs. And we were talking about looking for day 2. How does it change if it doesn't gap up? And I was very specific, kind of being like, could I look for a day 2 if I'm not positioned from day 1? Which also, I cringe even reading that, looking back. But if you could see what you wrote back to me, you said the context would change. I read the context first to direct me to what I want to be looking at or looking to do, if anything. And then I use the intraday patterns as they reveal themselves for areas to watch the tape, gauge strength and weakness, time the trade, and control my risk. I want to be marrying the intraday patterns I like to trade with the context of the trade because the patterns are nothing without context. And that goes right with what you were saying. They're just vehicles. But dude, talk
I
about
can't believe you found that. That's insane. We had a good
a little
time back
digging.
then. Yeah, that was the beginning of the end right there. Our partnership really kicked off.
I mean,
right
would
there.
we be here today? I don't know.
Yeah.
Working together on a team, doing a podcast, if it wasn't for you mentoring, because I needed to fix that over trading. And
Yeah, you did. You did. It was horrible. Like, I
thanks,
mean, you
man.
were new to your credit. I mean, like I was horrible too.
100%.
But yeah, look, I mean, all right. So context. What do we mean by this? And I really I want to emphasize the fact that this may not be what most people think it is, because we're going to go deep into this. Like, there's a real system that we have. It's fun. It's colorful. It's exciting. It's fun to track this kind of stuff and to look at the different narratives in the market and how they develop, especially these days. It's not just, oh, cool, the context, like the market's strong, or like, oh, cool, like this stock is strong, or this stock has a catalyst. There's more to it. It's pretty simple, but there's more to it. So I want to get in that, Tim. So I want to dive deep into like defining the drivers behind these plays, like what we mean when we say the real play is in the stock, right? Like what exactly that is. But first, like There's really not a better way to kinda get into this than talking about, like, what just happened in the market, right? So, it's December 7th on Sunday right now, so last week, there was a really big shift and a really great example of what we're talking about. Do you know what I'm getting at, Tim? Probably already, right?
Yeah, I mean, I would be lying if I didn't have it, if I didn't know. I mean, for us in terms of themes, yeah, robotics. Wednesday, we got the government. Trump put out a tweet from the White House, or a tweet about the White House saying that they want to accelerate their robotics program in 2026. And I'll be honest, yeah, that got me excited. It's a theme we've been tracking. So it was from Politico that reported it after the AI push. If we could all remember, I know you remember, Garrett, but it's been a while for me too. Last year, the beginning of the year, January, Trump said we want to be the best at AI, and we were going to push that area. And now it looks like they want to do it in robotics.
Okay, I think that's a key point. First of all, let's slow down a second because you just mentioned a theme we've been tracking. And I don't wanna gloss over that because that's really the crux of this. Like, the market moves in themes, and we haven't mentioned that yet, so that's why I wanna kinda get in on that. What we're doing here is we're tracking a robotics theme, right? And Tim, right, you just mentioned we were tracking the AI theme, we're tracking which turned into a data center theme, and there's all kinds of these movements going on in the market within these disruptive layers, right? So, robotics, maybe that's popping off. It's something that kinda hasn't. There's been a lot of speculation about it. Obviously, like, certain things like Optimus are kind of far away. Are they far away? Are they not? Right? That's, like, the big question. So, when you read this tweet, what was going through your mind other than the simple, like, "Oh, cool, there's a robotics catalyst today."
The main thing in I want to preface this alone isn't a standalone, huge, significant catalyst. But what it is a catalyst that could get the ball rolling to me. It's the first time the government has mentioned their interest in accelerating the robotics program. So it's on the forefront of their brain. And now when I read the catalyst, it's on the forefront of my brain. But that's the main way to interpret. And we're going to get into some of the real fun that you can do in terms of research. It's not rocket science to see how this could play out in terms of future catalysts, which we'll get into later. But initial read through is, oh my God, yeah, this could be like AI. They're interested in being the best in the world at robotics.
Okay, so you're you're looking at this like it's not a hard catalyst. What I would call a hard catalyst is something where
Yes.
there's an actual partnership, there's an actual revenue growth, there's something material. This is like a administration kind of saying like foreshadowing, like we're into
Yes.
it, right? But if we look back in time, we can kind of see how those things have played out and we can start to price in or at least create probabilities for future catalysts. And I would imagine, and I think this is part of the trick, is you're trying to think like a fund manager. Where's the money going to go? That's probably what fund managers are thinking about this, right? Like they're like, okay, if this just came out, if the administration's saying this, then what does that mean down the line? Like now, what does this open up for potential catalysts down the road? And I know, Tim, you actually did a lot of specific work with that to figure out what those potential catalysts are and even a timeline of when they could happen. And we'll we'll do that later. But I think that's key, right? Because like it's easy to look at this and be like, well, this isn't material. Like I'm not, we'll wait. We'll just wait. So what were the
And
stocks involved?
yeah, so we had Tesla, which I think me and you, we've been talking about it forever, but they potentially could be a leader in robotics. We know about Optimus. They were dancing at the shareholder event. iRobot, that was another one, IRBT, KITT, SERV, Path. Then you had some other low floats like MBot. But the main players, at least on Wednesday, that we were focusing on were Tesla, iRobot, KITT was your low float potential runner, and SERV was a little delayed reaction. But I would say those three were the main ones in the morning that I was keying in on.
Okay, so we've got this robotics theme. The first key is like, okay, we see the catalyst. We're going to kind of think about what this means, what other market participants might think about this, whether this is really a theme driving catalyst. Like, is this now worth just focusing on robotics today? And I know that we decided like this is our only focus.
Yes.
This is the only thing we're watching. Um, and this is the beginning of kind of figuring out, what stocks to trade, right? Because on this day, like this was where to be. Now, if we go through these names, Tesla, KITT, IRBT, SERV, now like they're not all created equal. Um, I think they each have like different sort of reasons for being talked about here. Like we have a list of these. We already had a list of these. We already had them broken down into categories. Now, we'll go over how we do that later, and this is a big part of our process for being ready for these themes, because that's kind of the point, right? You see a headline like this, you want to be ready. We had the list, we knew the names. But if we were to break this down, Tesla is one of the only institutionally viable names here, right? A lot of these others are like KITT's a low float, IRBT, like they make Roomba, like the
Yeah,
vacuum.
those Roombas, which
Um,
I've made fun of in the past. I'll hand up, I made fun of them.
Yeah, and I mean, like high short interest name, been beaten down. Like, I mean, I wouldn't necessarily call this like a leader or even a potential leader. Like, I mean, who knows what they do, but there aren't that many places to go right now in robotics. Like you mentioned, Path, they just had blowout earnings. They have their own thing going on, like super interesting. I mean, that's a viable play for institutions, I think, but it's not really like a pure play the same way Tesla is. And then you have these other names that are popping off, kind of like, remember when AI first became a big thing and that ticker AI was like going nuts? And I mean, they don't really do anything
What a
as a
piece of
company,
crap.
but but I mean, there weren't many ways to play it. So something like that goes nuts, and then time goes on and people start to, you know, join the theme, realize like what are the players, like who's participating, how are people participating, partnerships happen. People realized Nvidia, huge, right? At that point, it was really just Nvidia, like SMCI, Microsoft, and then that expanded into data centers. And we'll get into that later. But right now, we're in such an early stage of, say, this robotics theme that you've kind of got Tesla, and then you've got a bunch of weird names, but the key for us is like we know the names already and we've got the filters to kind of scan for volume to see like what's showing up. So right off the bat, when this came out, I remember it was KITT, IRBT, Tesla, SERV. Like these were all the ones making moves in the pre-market. So that's the first
Yeah.
tip.
Dude, it's so funny when you're saying early on investors don't really know where to put their money. Like, it's so funny to me. AI has it in the name. Everyone's like, oh, buy AI. iRobot has robot in the name, and that went up 50%. Like, it's so funny early on. Like, that is enough, you know?
It is. And I mean, like at this stage, like I don't care if they just make vacuum cleaners. Like I always think of the Parks and Rec episode where they had the DJ Roomba,
Oh, yeah. I
anyway.
remember that one. Yeah.
Like I mean, at this point, it doesn't matter. We're just traders. We're just trying to find volume in these themes, right? But it is good to know that okay, if I were to try to swing something out of this, like for a longer period of time, it would probably be Tesla. But that's besides the point. We're just trading it on Wednesday, right? So we've got these names. Like Tim, do you want to bring any of these charts up? I think we have the intraday charts that we can talk about here.
Yeah,
But
let's start with Tesla. Kurt, could you bring up number 3? And this is the intraday at Tesla. I want to just show you this one because who was it on the desk that traded this in an interesting way?
yeah, it was Brody. I remember like Shane
Yeah,
mentioning like
yeah.
Brody had like big size in Tesla since the open. And like I don't know exactly what his play was. I didn't talk to him, but he was just swinging big size in Tesla basically from the open, right? So is it really that easy? And like
I-
that's kind of the point, right? If you can kind of see the volume flowing into this theme, see how they're acting in the pre-market, understand how institutions might treat this, realize that like Tesla is going to be one of the most liquid names and most viably um, applicable names to this theme, if not the only legitimate one, um, just buy it. Is it that? Is it that simple?
And Brody, he's been on the desk for a lot of years. He's an elite trader at the firm, super experienced, and it could be that simple.
Yeah. So you if you're, I think if you're an active day trader, if you like to trade off the tape, if you like to trade patterns, right? If you have your intraday setups, they're great stocks to watch because you could wait for something like that and take it. And you just know that there's going to be volume, there's going to be liquidity, there's a tailwind, especially when you see all of these moving together. It's not just
Yes,
Tesla, it's KITT, it's IRBT, it's SERV. They're all popping off one after another. When you have a whole group moving together, there's always like a much bigger tailwind for the stock that you're trading if it's involved in that. So even if you're not, trading it based on the catalyst, like maybe Brody wasn't just buying size at the open, maybe against low a day. Again, I don't know exactly what he was doing. You could be just scalping this knowing that, okay, this is going to have a tailwind. I'm going to find my patterns and I'm probably going to get better risk reward out of something like this because it could make big moves. Like look at this move that Tesla made in the afternoon. It got really tight, broke out again. So I think in
exactly.
general, like this is the definition of stocks to trade. And we've talked before about like the force index scanner that we've built that shows us the stocks, the 10 strongest stocks in the market that are doing the most volume and the 10 weakest stocks in the market that are doing the most volume. And we like to use this sometimes as a theme filter because if 5 out of 10 of those stocks are all robotic stocks, that's telling us something immediately, especially right off the open.
Exactly. Here, Kurt, could you actually put up number 8? I want to have you see this one next because we had our team leader, K-Fitz. He traded this really well, and he was getting in around, I think it was a buck he was getting in. And this is one potential runner on the robotics team. So you see Tesla go off the open, you see IRBT go off the open. This one kind of, was doing a ton of volume, but it was a little delayed in terms of when it started to perk up.
Yeah, even the volume came in later. You can
Yeah,
see it. So it looks like K-Fitz was buying it when the volume came in. So K-Fitz is an amazing swing trader, thematic trader. I mean, he's really good at this stuff. And I would say that like he admits that everyone has their strengths and weaknesses. Like his weakness is finding a very specific inflection, timing something off the tape with like a real intraday pattern and kind of going from 0 to 60, right? That's not his style. Like his style is
no.
identifying which stocks to be in, which direction they're going to go, where's the right stop, where can I hold this to? And he's a great swing trader. So I think we were talking to him on this day and he's like, yeah, I just bought it against low a day because once I saw the volume come in and I saw the whole group go, this was one of the viable plays doing the most volume. Um, he's like, I just bought it and held it.
And I
Right.
was even texting him, and he was like, "Yeah, I'll be honest. Like my entry price was terrible. Like I bought it right after that at first leg into $1." So he wasn't worried about the intraday pattern. Also, I'd be remiss to say I think he might be the best Tesla trader at our firm.
Yeah.
He traded a great traded kit, but yeah, he is very great at reading Tesla and executing Tesla trades.
Yeah. Yeah. Absolutely. And I see a number of great intraday patterns just by looking at this chart. So there's something for everybody. But I think the main takeaway, like to keep driving it home, is that like if you're trading these stocks long on this day, you're probably going to do well, no matter what style you have. And there's definitely
Yeah,
a way to be like, I'm looking for longs in KITT today. I'm looking for longs in Tesla, IRBT, etc.
exactly. It's the stocks in play.
Yeah. So all right. So this kind of thing repeats itself over and over, meaning like these thematic moves in the market, right? You really don't have to be a rocket scientist to figure this out, right? Because I mean, if we can do it, Tim, I think anyone can do it, and it's happened many times over in the past, especially this year. I mean, there's been a lot of stuff this year because there's so much disruption in the market lately with the AI theme. Um, I want to go over some of these moments, and I really do think that like our minds are going to be blown a little bit about how like similar these moments are to each other. I want to dive into like how we catch these big moves in like NBIS and CoreWeave this year because it's the same type of strategy. But first, let's define the drivers behind these plays. Like, what do we mean when we say the real play is in the stock?
Here's a mind-bending stat for you. S&B traders have 20x to 40x higher odds of success than independent traders. Find out why and how to greatly increase your odds by visiting smbtradingfloor.com.
And I want to mention too, like I'm so happy we're talking about this today because the work I've been doing on this front has been literally so inspiring. Like for so many years with of my career, I thought to gain a fundamental edge, you had to become a sell side analyst. You had to read everything. And there is edge maybe to doing that, but it's not rocket science. Like it's really been pumping me up. And I've been saying it to our team too. We got this because it's not rocket science. It's just digging one step deeper, and it's really inspiring me.
Yeah, you've
So I'm
you've been
so
on a
happy.
tear.
Like,
You've been on a complete like Black Mamba style tear on this stuff, which is great.
it's been
Um,
fun.
yeah. So since you've been on a tear, what are the drivers in
Yeah. So
that we look
everyone,
at?
when we say stocks in play, it's easy to just think about RVOL, and it's like, all right, RVOL's above 1.5, RVOL's above 2, the stock's in play. But what it really means is like, is it a catalyst? Does it have a theme? And these aren't standalone things on one given day. It's really how these catalysts develop, and you kind of start to see the story that's built from catalysts and the story that's built from themes. And that's where you get these stocks in play, in my opinion.
Okay, so a catalyst, define catalyst. Like that can be what? Fundamental, but
Yeah.
does it have to be only fundamental?
No, I mean, there's a ton of different catalysts. Like, that's the other interesting thing. So you can have catalysts at different points of a stock's um, pretty much a stock story, but a stock's trajectory. So like there could be catalysts in the beginning where it's like new product, new technology. They're just better. They're maybe a first mover in a certain technology and it doesn't have any revenue number to it. It's not a partnership, but it's like, okay, that's one catalyst. You can have your classic earnings reports, which we know very well. But yeah, so you have new products. You can have partnerships. You can have partnerships that disclose revenue amounts. They disclose how many years the partnership is. Some do, some don't. They leave out one or two of those things, and some have all of the details. And those are more significant when I'm interpreting them. If they give you all the visibility into the future, you can have offerings. I mean, that's been a common theme, which I'll get into because I find it very interesting with the offerings that came around certain data center contracts, but
Okay.
many different catalysts.
So I would argue that like positioning, like short interest can be a catalyst. Like you can have literally just a short squeeze in a stock. A lot of times those come from some type of news, but the news doesn't have to be as material as say the short interest in the volume that's now highlighting the fact that we're seeing a short squeeze in a stock. So that could be a catalyst. I would argue that technicals can be a catalyst.
Have you heard this study of tens of millions of traders, which shows that only 1% of retail traders actually make it? Don't be a statistic. Visit smbtradingfloor.com to greatly increase your odds.
You have a major base, multi-year base breakout. Now, I would also argue that usually those things don't happen without some sort of theme behind them, which is why we're tracking the themes. But um, any of those things can be a catalyst for a stock, for our trade. Now, what is a theme, right? Like, I would
Yeah.
say, I'll answer my own question first, and then I'll ask you. It's like the story of a name, right? And this is where we don't have to be fundamental, and we're not trying to figure out the valuations of these companies and like where they're going to be in 10 years. We're just trying to figure out where's the money flowing to, why, what's the story. right? And if there's a story in one stock, then does that mean there's a story in a bunch of sympathies, right? And then all of a sudden that becomes the theme. So a group of names that fit into the same hot narrative, right? Like the data center plays, like robotics, like we just talked about, like right now we're starting to see like fiber optics names like pop off and photonics, and we've seen nuclear, right? And all this kind of stuff. So when all those names start to move together, and it's usually from some type of disruption that's occurring in the market, so we want to track these things.
Honestly, I could just say the same thing and regurgitate it, but I think you hit the nail on the head,
All right,
man.
great. All right, so I want to talk about the ways we've developed to track these things, like tracking catalysts, tracking themes, like keeping these watch lists, understanding who are the real players so that we're ready every time something like that happens, like on a Wednesday with robotics, because it's going to happen again, and it's going to happen a lot, right? And these things can happen to the short side, they can happen to the long side, of course. So um, it's been a real game changer in our trading. Like I know that for a fact. So I want to share this, but first, like what are the themes that have been relevant this year, Tim? Because I want to kind of tell the story of some of these, because like we said, we promised that we would show things that are very similar to this robotics day, and just kind of demonstrate like and discuss how these things repeat themselves and they rhyme, and it's really not that complicated. So what do you got since you've been on a tear?
I think the most interesting theme has been data center stocks within the whole entire AI trade. And there's been a lot of other ones, like a ton of speculative themes. Quantum had a crazy move this year, and that was a very buzzworthy theme that
Mhm.
had people on both sides. It's never going to be a technology. We're 30 years away. Look at those buildings. If you remember those buildings, all their headquarters.
Yeah,
And
like
then there's some
they're in
people, yeah,
garages. Yeah.
yeah, literally garages. And then some people, and this is kind of how I was who cares? Look at the volume, look at the price action. This is a theme that has gained traction and you're seeing it in the chart. But the real one, like the data centers, has been so interesting
Well,
to
hold on.
study.
Before we go into data centers, you're talking quantum. Let's just
Yeah,
hang there for a second.
I'm down.
Cause I real quick, because I think this is a great example of the power of themes. Like this demonstrates what we're talking about because they were ahead of themselves, right? These companies didn't have real revenue. They shouldn't have exploded like that. But when
Exactly.
something like that becomes hot and they're all moving together, and they didn't, I mean, for a period of time there, mid-year, they didn't go down after making a big move, and they consolidated their gains. They all broke out on a day that I think Iowa and Q had some news. Big volume base breakout. They all broke out at the same time. You've got so many people doubting the fundamentals for good reason, but it was a hot theme breaking out on volume, and they were all going together. So that to me is like the definition of like what we talked about, like a short squeeze, right? You may not have
Yes.
the fundamentals, but you have the theme, you have the agreement, right? They're all going together. You have the volume, you have the short squeeze, and it just becomes, um, just catches fire. Like the whole house burns down, right? You just light a match, and it's like boom. That's less likely to happen in something that's not thematic.
Because with themes, everyone likes to pick a side and they do it pretty quickly. They make a judgment in terms of, like, you know what, this is never going to happen, pessimistic about it. And then there's other people that are like, this is the future. And it becomes very divided. And that alone creates a pretty interesting dynamic because, I mean, it was the most powerful theme. You had Skrelly tweeting like, "Oh, these are going to zero." Like, I've been shorting them for months. The whole way up, he was shorting them. And what's interesting is you both sides can be right at different points in time.
Right. Yeah. The longs were right to play that breakout. And then if you were saying these are a big short, they eventually were. And there was a great opportunity on the short side. Just great stocks to be trading. So, all
And
right.
that's the
So,
whole point.
and that's the whole point. So, all right. So, let's data centers. So, this is your favorite theme this year.
Yes.
Tell us
Yes.
why. What's going on here?
Here, let me pull this up. This is a pretty much data center catalyst timeline. And this, Garrett, is just from our Notion. It might look familiar.
Yeah, yeah.
And what one thing before I even get into the fun stuff, I have noticed looking at these on a timeline has been incredibly helpful. Because if you're just looking at each individual catalyst, it's so hard to find these parallels. And there's so many parallels. But the data center stocks, like you said in the beginning of the AI trade, you only went to NVIDIA. That was the AI stock. And then you start doing some digging and you look at, all right, how are they actually going to be able to produce these chips? How is the AI trade going to run? It's going to run through data centers. And those are your NBIS, CoreWeave as your pure plays. You have Cypher and Iron as the main ones.
Yep.
And then similar, you had nuclear, which is like how you're going to power it. But what
Right.
I thought was so interesting with data centers is you had this massive catalyst on NBIS. This was on September 8th. And you can see that was like the bottom square that I like highlighted. But they had a $19 billion deal that they signed with Microsoft. 19 billion, dude. Like crazy numbers.
Yeah. That's huge. That's an outlier type of deal.
Outlier for sure. And then like if you're just looking at the catalyst for just NBIS, you're like, okay, like that's a huge gap. And I remember thinking on that day, all right, that's a huge gap. It's going to the Keltner on the daily, upper Keltner on the daily. Like, I probably need to let this rest. At the same time, Cypher and Iron on 9-8 broke out on their dailies,
Yeah,
which,
and
yeah,
the news was for Envis.
news was for NBIS. They weren't, Cypher and Iron were not involved in this Microsoft contract. That's all, at all.
Right. But they broke out the same day.
So when it comes to like thinking about it, you're like, oh, that's kind of weird, right? Like, why would they break out on that day? And what happens with these themes is there's this element of buy side and investors pricing in the possibility, since Cypher and Iron are involved in the data center theme and NBIS, which is a similar stock, getting this big of a deal, you start to think, what if Iron and Cypher could lock down a contract with a hyperscaler? So that's what's going on in your mind. And you can see then as we go through our timeline. So then Iron gets close to $1 billion order from NVIDIA and AMD. At the same point, they ended up raising their guidance. And then later, Cypher, which is a little smaller, in my opinion, of like significance, had a 10-year deal, about $3 billion with Fluid Stack. And
Yeah.
so I didn't even highlight this, but I kind of want to go into this because I mentioned the offerings. Even the offerings, like I used to look at offerings as just always negative. And that's kind of like we studied certain offering plays. And if it's like very dilutive, they could be good shorts. So it's a different story when you start looking into the data center theme, where NBIS has a $19 billion deal with Microsoft. And then 2 days later, they do 2.75 billion of convertible notes offering. So you could be like, oh, like, yeah, it should sell off. Like that's bad. They're diluting their stock. But then it's just to fulfill the contract with Microsoft. They had to do an offering to be able to just actually go ahead with this deal and be able to fulfill the contract. There's
Buy
no
the
way
dip.
otherwise.
Buy the
And
dip.
then what was so interesting too. And at this point, Kurt, could you actually? I want to look at the NBIS Daily because that was on. I believe it was 3 days after, and I remember even thinking like, okay, this is like interesting. It doesn't go lower on the offering. I'm still looking for a breakout after that deal. Doesn't go lower on the offering, and this understanding would have even helped that case even more.
When you see the offering, you're not getting concerned because you're putting it in the context of the story and you're saying, of course they're doing an offering.
And
They're
I think
doing
it goes to show they're all made not all offerings are equal.
right. Okay, so Microsoft deal, and then do we have the Iron and Cypher charts that we could show? Because I want to see those breakouts on that same day.
Yeah, let's go to those.
Okay, so here's Iron. That's a beautiful, I mean, that's textbook. Beautiful price action. Amazing. I mean, compressed 3 days, tightened up, gapped up a little bit, traded back to the top of the range, broke on day 2, and then just, I mean, amazing, amazing trend after that.
And
That
they broke out well before they actually got contracts themselves.
right, I mean, that's the like, this was a maybe a bigger move than NBIS post NBIS deal. I mean, because you get the anticipation of the contract, and then Iron finally gets the deal, and then that's like another catalyst. Yeah, I mean, super interesting, super interesting. So you could have
And
played the sympathy if you had your what I'm getting here from your narrative is that if you understand the data center theme, understand the players, realize that Iron and Cypher are in a similar position to get a major partnership deal with one of the hyperscalers or someone smaller, that you can start to think about the fact that these might get bid up in sympathy ahead of any catalyst that they might get. In other words,
exactly.
the whole theme's gonna run. It's not just NBIS.
Exactly. You start to get that pricing in of potential deals. Robotics, we have this on Wednesday, and you look at that catalyst and you're like, all right, that's interesting. Like it piques your interest. The government, the US government wants to accelerate robotics. So immediately where my brain went and I started talking with Claude is wait a second, this is very similar to what happened the beginning of Trump's term last January with AI. And I don't know. So what we're looking at right now is a piece of kind of the research that I did. And once I got that first catalyst on Wednesday, I wanted to think, okay, what could be future potential catalysts
For
in this theme
robotics.
for robotics if it follows a similar precedent to the AI government involvement?
Okay, so let me get this straight. We're looking at some work that you did on the robotics catalyst theme,
Yes,
drawing potential parallels in the robotics theme to the already happened data center theme. So you're looking at the data center theme. How did this play out based on government, the beginnings of the government talking about the administrative talking about it, and then what happened, and then now what could happen to robotics. Am I right?
exactly.
Okay.
Exactly. And the other, if people take the different side, you'll see the headline on Wednesday and they say, robotics, like we're not going to have robots in our kitchens doing the dishes for at least 15 years. I don't care about this now. But what was really interesting when I started going into this was just the first parallel was you get the announcement that they're interested in robotics. So that's number one. Then you start getting a government official. In this case, it was Howard Lutnick starting to meet with CEOs of major robotics companies. Very similar to how the government was meeting with AI companies last January. So then what I'm starting to look at is, what's the next future catalyst? And in the AI precedent, we had the Stargate announcement. So this was all very expedited. Like Trump was going crazy with all those executive orders last January, but we got the Stargate joint venture with OpenAI, SoftBank, NVIDIA. And that was a day after they mentioned that they wanted to be number one in the world in AI. So I'm starting to think, okay, when could we, or are we going to maybe possibly get a huge joint venture between robotics companies like Tesla or Figure AI, who's private? And that
Right.
only comes after you get the meetings with the CEOs, with the government. That's usually a precursor.
Right. Okay. Let's show the next slide because I'm looking at it
Yeah.
here, and I think this really shows what you're talking about. So this kind of
Yeah.
breaks up, if I'm correct, each potential catalyst based on your analog of kind of what happened with data centers. What if the same type of thing happens with robotics? A timeline and potential catalyst. So
Yes.
it looks like two things have already happened. So you're saying like Commerce Secretary CEO meetings, right? That's the type of thing that if something like Stargate is going to happen, that has to happen first.
Yes,
That was
exactly.
your last comment there. Yeah, okay. All right, go ahead.
And then you start hearing about it. So we heard about Lutnick meeting with them, and it's already been kind of floated in the air that the Department of Transportation is looking to have a working group for just robotics. So that alone isn't the Stargate. That isn't an executive order. But to me, that's a focused, very directed um, approach now to robotics. So it's like you have all this like in the air, kind of like the Fugazi, oh, maybe they'll go into robotics. You build a working group, it's like, oh, they're doing it. And then the major two, which number 4 and 5 here could be flipped. This is going off of AI, which the Stargate came before the official executive order. But the next two things would be Trump comes out and he has a full executive order. I think it was called like Path to AI or something like Path to AI Freedom last January. But that's like all gas, no brakes. Then the government's doing it. What's interesting to me is like you start thinking about when this could happen. So these might not be the exact dates. I bet they're not the exact dates, but the idea is, we're going to try to be ready for them. And it could be interesting timing, the start of Trump's second year. He comes out hot again with a bunch of announcements, very similar to the start of last year, where he had all the executive orders. And maybe next January or February, there is a robotics executive order. And why that matters is what comes after the executive order.
Okay. So the same reason that that I can play devil's advocate here is the same reason why I love this. Explain to you what I mean.
Yeah, I want to hear it.
So my devil's advocate would be, and I know you'd agree, probably, is that when we had these catalysts come forth with AI, like AI was already happening. Like we had ChatGPT, we had the world adopting it. So it was much easier for the government, the administration to say, okay, we're backing this. Okay, like now's the time to pull the trigger. We need to beat China. We're not nearly as far along in robotics, seemingly yet, right? So,
Yeah, I agree with that.
so is it, is it harder for the administration to pull the trigger on something like that, where like we don't have the production, we don't, it's not as adopted. So that's my pushback, but that's everybody's pushback. So if you're thinking only like that, you're just not going to be prepared for if this happens. So like you said, it might not be the same timeline. It might take longer. Maybe it never happens. But I think the
Yeah.
key here for me is that doing this kind of exercise prepares you for whenever something like this kind of story starts to develop, because you never know. Like you never know if Tesla gets ahead, right? All of a sudden, a little bit of adoption picks up. Now maybe the administration's like concerned that we're not competing with China. They kind of expedite some of this stuff. Before you know it, we're here. So just in case
Yes.
that happens, it's great to be prepared. Um,
In with the executive order, I know if an executive order comes out, I'm probably running my TWAP on a lot of robotics names because
yeah,
then that could be pricing in the government taking stakes in these companies and granting funds.
right. I mean, I like how you're taking one catalyst and then projecting that onto into the next one that's going to happen, because that really is how the market thinks, which is kind of the way to read through these catalysts. Um, Really quick, you have to have, like, to our point here, I think you have to have an imagination to kind of be tracking this stuff, because we're talking about robotics and some of these other themes like space. I mean, they're kind of fun, right? They're like pretty
Yeah.
far out, no pun intended. Um,
But
right. Yeah, I mean, it's interesting stuff to be reading about, right? Like all these space companies with the satellites and the rockets and the robots, right? So it's interesting work, but a lot of this stuff is like either far out, like quantum, or maybe it happens, right? But there's always that big inflection point that brings it into focus, like when OpenAI created ChatGPT and put that out and everyone adopted it, all of a sudden, like AI was here. No one was expecting that. That kind of event could happen like with any one of these themes. So it's good to be prepared. And it kind of reminds me of like, I mean, these things kind of mature. Like once they do happen, they mature and then they're not as disruptive anymore and they kind of calm down, right? Like wireless used to be a huge deal. People were like, no way, wireless. Are you kidding me? And like, that became hot and then now it's like normal. It's like practically like a utility. And
What were you telling me? Yeah, you were telling me kind of stories from when your dad was trading about that.
yeah,
I
yeah, yeah.
forget
I
exactly.
remember like he told me this story about, and this was before our time, obviously, um, before we were even trading or locked into the market. But back when computers were maybe even alive for that matter, but back when computers were becoming hot, the hot thing, right? Whether that was, I mean, I know that started in the 70s, but at this point we're probably talking 80s, 90s. In the beginning, it was all hardware. It was like IBM and like Intel and, wow, these computers, that's crazy, right? When
Yeah.
stuff you could drop on your foot. When software came along, apparently, no one believed it. They're like, you can't see it. You can't you can't touch it. Like there's no like how can you
Yeah.
sell it? Like there's not this isn't a product. It's just part of the computer. Like people didn't understand what software was and they were like there's no way. And there was like all kinds of skepticism around like the software theme when that was new. And then
It's so
all
funny.
and then all of a sudden, Microsoft with like Windows and they became literally the biggest stock in the market. So it's a good kind of lesson to look back and be like, just keep an open mind.
Yeah, that's a good story. I mean, everyone wanted something you could hold in your hand and drop on your foot, and then, yep, software.
Yeah, yeah, exactly. So I want to go over like some big potential future themes that we're tracking because I find a few of
Oh,
these like
yeah.
really interesting. But first, let's just talk about like how we track these themes. Like what kind of work are we doing to optimize this process? Like how are we using this to make money, right? So we've gone over some examples on how this stuff plays out and how that can direct us to trading the right names, right? Like during the data center craze, you had an NBIS catalyst and you should have had Iron and Cypher on your watch list as well, right? And those were the right
Yes.
stocks to be trading on that day. On Wednesday, it was Robotics, right? So you can kind of see this pattern where we're tracking catalysts, we're tracking, various research on these themes and just tracking the themes in general, getting to know the names, getting to know the charts, what has volume, what doesn't, what's liquid, what's a pure play, what's kind of junk, but maybe it runs because of a low float kind of dynamic, right? There's all kinds of different things. So this is our team's notion, and it doesn't show the whole thing; it gets cut off. But this is just a quick example of like how we break it down. And like the thing I like about this is it really is very trader specific, right? Because like you could like, if you look at the ETFs, like XLCs, like communications, and it's got Google and Meta in there and stuff like that, and you've got XLK, which has a lot of software and semis, and like the way the ETFs break these things up are very old school because they can't just create new ETFs like all they kind of do. I mean, there's a data center ETF now, but you know what I mean. I mean, this stuff is
It's a
very
blade. Yeah.
it's very delayed, it's very sort of antiquated, but you can really go into breaking these themes down in a very trader-centric way, and that's what we've done, and these are baskets of names that move together on the theme. So inside each one of these pages, if you just look at the image, is where we break down the tickers and all the information and catalysts that we have for that theme, and that's just how we organize these things. So, like, if you're looking within infrastructure, which is the fourth major category down, you can see data center, right? And so inside there, we have all the data center names that are going to move in sympathy together on something like that NBIS catalyst that you pointed out, right? And you can see we've got robotics there under frontier tech. And that's exactly where we go to on a Wednesday morning when we get a catalyst like that. And we check out the list and we can look at all the charts and quickly get to the right names.
And Garrett, I love our Notion. I want to even mention again all the work you did on this is literally so insane. Like you crushed our Notion.
Yeah, we used to track this stuff differently in a less organized way, and we've started to do it in a way that's a lot more scalable, so that we can keep track of the information over time, which has been nice. Um,
Scalable is a word. Yeah.
yeah, I think it's a great tool. I mean, you can use Evernote, you can use Note. I mean, there are a million different um, what would you call them? Like data organization or project management tools out there that you can use for stuff like this. So future themes, Tim, like what are we looking at now? I mean, we talked about robotics. That's still something to talk about, based on what happened Wednesday. We're going to be tracking that. But it's always nice to kind of think into the future and think about, okay, like what's around the corner, right? Because data centers happen, they topped out, right? Maybe they consolidate for a while. There's another leg. Like everyone's arguing, is AI over? Was it a bubble? Did it pop? And like we don't really care because we're just going to follow the volume and the market environments. But there's always some future potential themes to kind of wonder about because you never know when these are going to pop off. So what are you looking at?
I know you're great with math and thinking theoretically. So basically, we had our first derivative within AI, NVIDIA. We've had our second derivative with the data centers, nuclear. And I would say now we're kind of on the third derivative, which could be fiber optics, photonics, edge computing, power semis,
Okay,
which,
okay, okay. So you just
yeah,
mentioned, was that 4 themes right there? 4 different ones?
four. Yep.
Okay, so fiber optics, fiber optics and photonics, I'd kind of put them in a similar bucket, right? Because they're kind of the inner workings of the data centers. Am I right about this?
Yeah, I would say the same.
Right? So those are names like if you've noticed like LITE and COHR,
Yeah.
why is COHR going nuts? Why is LITE going nuts? Well, it's because of this, right? And there are other names in that category that might be setting up, right? So that's the key. So we've actually seen volume and price action and relative strength flow into the photonics fiber optics names over the last like month, ever since the market weakness came. So like the funny thing about market environment and rotations in the market is that like we just got that big pull, right? That was
Yeah.
scary to a lot of people because people are watching crypto get crushed. People are watching the data center stuff come off big time. Like sometimes like some of these have lost like 50%. Um, big unwinds, right? These are going to have to totally reset now. And if you're too focused on like the last quarter's theme or whatever, you're just like thinking, "Oh, the market is terrible right now and there's no opportunity and man, I don't know if these are going to come back." And you're just sitting here waiting obsessed over, the data center names. Meanwhile, LITE, COHR are popping off. Go check them
Crazy
out if you
moves.
if you haven't. And there's a whole other like group of names that are in that theme that are trading great, that are at highs. And so that's kind of the point, right? It's like we want to stay on the forefront. So you mentioned edge computing. Um, what's that?
So yeah, basically that is instead of having data like go to the cloud, it is pretty much collecting the data, managing the data on at the source where you're collecting it. So it doesn't have to go anywhere. Why that's important is it's so much faster. So if you think about like any robo taxi, think about the robo taxis or autonomous vehicles, you need split second um, inference there. And you can only really get that if it's at the source of where the data is being generated.
Right. So instead of having the source be these big data centers and having the inference travel all the way to the device or the robot or the car or whatever you're talking about, you're actually having it compute like at the at the edge. That's why they call it edge
At
computing,
the
right?
edge, exactly.
And so that it's much faster. And so that's another area that is kind of interesting. There are a lot of semiconductors that specialize in that. Like some do it, some don't. And so it's interesting to know which names do, because if that theme starts popping off, like, and what would cause that to pop off? Well, if robotics and autonomous driving and if AI, more complex, powerful AI devices, right? Not just on our internet using Gemini on our phone, but real AI um, on our devices and mobile and stuff like that. Those are if that stuff really starts to pick up, the demand for edge computing, from what I understand, is going to pick up, and so that's like another dynamic to look at in the market and be ready for, because these things happen fast.
What I find interesting, because we haven't heard much about it, and this is again just something that piqued interest, is edge computing has a huge place if we start getting into robotic surgeries in medicine, because one, you can't have confidential client data, like patient data, not client data, confidential patient data, like go somewhere else. Like you need it to stay at the edge, at the source, and that's not been talked about. So that's something that's at the way back of my head, where like it might have a place also in biotech.
That's super cool. I mean, did you know? I heard about this over Thanksgiving. Do you know they did the first successful open heart surgery from like across, like from another
Wait,
country?
no way. Wait, you're saying like just completely no doctor was
It
there?
was so
No
it, no,
surgeon was
it
there?
was robotic, uh, controlled by a doctor in another country. So it wasn't autonomous. Like it wasn't like a robot, like a you know Optimus, like AI or anything like that. But it was completely robotic, done by a doctor. Successful open heart surgery, remote, done remotely.
Wow.
It's pretty
Wow.
crazy.
You know what's funny is we didn't get to talking about that, but we were talking about Andrew at my Thanksgiving.
Right. Thanksgiving is always a great time to talk about this kind of stuff. I feel like it always comes up.
Oh,
Um,
I mean, I'm the one bringing it up usually.
yeah, yeah, yeah. Lynn at Speculator IO on Twitter posted this great sort of rundown of all the future IPOs. So you mentioned Andrel, that's one of them that he mentioned here. But check this out. Like this is a great sort of roadmap for potential themes going forward, because when these IPO, like these are going to be huge. And I mean, maybe this just tops the market and everything, but Tim, you've been talking about just the absolute magnitude of these things that are going to be coming out.
2026 is about to be a crazy IPO year. I mean, look at the funding. Like Anthropic, SpaceX, OpenAI, Anduril, number 4 there, Perplexity. I mean, I'm excited. But yeah, look at the themes they're in.
Yeah. So space, defense, AI, robotics, fintech, crypto, chips, cloud, right? So we got big IPOs in all of those things. And clearly everyone's looking at OpenAI, but there are a lot of other big ones to be looking forward to. So it's going to be great.
I'm excited for our IPO playbook.
All right, well, let's end it there. We'll revisit this kind of stuff in the future as the stuff develops, and we have new themes to talk about, new trades to talk about. But subscribe, hit that like button, and we'll see you next time. Thanks, everyone.